Hey traders, let me ask you something. Have you ever looked at a chart and felt like it was speaking to you? Like it was trying to tell you exactly what's coming next, if only you knew how to read it? Well, guess what? You're in the right place. Welcome to PropFirm Ask, the channel where we break down trading concepts so clearly, even your dog might start trading. Just kidding. Unless your dog's smarter than most retail traders. In today's video, we're diving deep into chart patterns, the secret language of price action. By the end of this masterclass, you'll walk away knowing how to spot patterns, why they matter, how to trade them, and how to avoid the traps that catch beginners off guard. We're talking patterns that work in stocks, forex, crypto, you name it. These techniques are time-tested and battle-proven. So grab your notebook, hit that like button, subscribe if you're serious about leveling up, and don't forget the bell icon so you never miss another trading gem. All right, let's dive right in. Understanding chart patterns. First things first, what exactly is a chart pattern? A chart pattern is a visual formation created by the movement of price on a trading chart. These patterns tend to repeat over time and can provide insight into where the price might go next. Why do they repeat? Because they reflect human behavior, fear, greed, hope, and indecision. These emotional cycles tend to play out similarly again and again. Chart patterns are essentially the market's way of telling you a story. The price doesn't move randomly. It moves with purpose, driven by real human emotions. And just like a good story, once you learn how to read the signs, you'll start to predict what might happen next. There are three main types of chart patterns. 1. Continuation patterns. These suggest that the current trend will likely continue. So if the market is going up and you see a continuation pattern, it's probably going to keep rising. Same if it's going down. Second, reversal patterns. These indicate that the current trend might reverse. If prices have been going up for a while and a reversal pattern appears, it might be time to expect a drop, and vice versa. 3. Bilateral patterns. These are the trickiest. They can break either way, up or down. It's like a coin toss, but with some strategy involved. These require confirmation through indicators or price action. Remember, these patterns aren't just used in one market. Whether you're trading Apple stocks, EUR/USD Forex pairs, or even Dogecoin, chart patterns are universal. They can be applied across markets and time frames. But here's the kicker. Don't rely on patterns alone. You need to combine them with indicators like RSI, Relative Strength Index, MACD, Moving Average Convergence Divergence, Volume, and Moving Averages to confirm your entries. Let's break down each type and go into the specific patterns. Reversal patterns. Reversal patterns are your best friends when you're trying to catch tops and bottoms in the market. Here are the most powerful ones. 1. Double top, bearish reversal. The double top pattern occurs when the price rises to a resistance level, falls, then tries again but fails to break through that level a second time. It forms an M shape on the chart. What it means? It's a sign that the bulls, buyers, are getting tired, and the bears, sellers, are taking control. Entry. Wait for the neckline, the low between the two tops, to break downward. Stop loss. Place it just above the second top. Take profit. Measure the distance from the top to the neckline and project that downward from the breakout point. Example: price hits $100 twice, fails both times, and breaks below the $95 neckline. Target equals $90. Two, double bottom, bullish reversal. This is the opposite of the double top. It forms a W shape. Price drops to a support level, bounces, tests it again, and then moves up. What it means: bears are losing steam. Bulls are gearing up. Entry: buy after price breaks above the neckline. Stop loss. Place it just below the second bottom. Take profit. Same logic. Measure height from bottom to neckline. Project it upward. Tip: look for increased volume on the breakout. That confirms the pattern. 3. Head and shoulders, bearish reversal. This is one of the most reliable patterns. It consists of 3 peaks: a higher peak, head, between 2 lower peaks, shoulders. What it means: momentum is fading. Buyers are giving up. Entry: wait for the neckline to break. Stop loss. Above the right shoulder. Take profit. Measure height from head to neckline and project it downward. Inverse head and shoulders. Same idea but flipped. It's bullish and signals a move higher. 4. Triple top and triple bottom. These patterns form when price hits the same level 3 times. Triple top is bearish. Triple bottom is bullish. Entry: on the break of the neckline. Stop loss. Above the last peak, top, or below the last dip, bottom. Take profit. Height from peak, dip, to neckline projected in breakout direction. Pro tip: they're rare but powerful, especially with strong volume signals. Continuation patterns. These patterns show up when the market takes a pause but then continues in the same direction, like taking a breath before continuing to run. 5. Cup and handle, bullish continuation. This pattern looks like, you guessed it, a teacup with a handle. Formation: price dips, forms a rounded bottom, cup, then slightly pulls back, handle. Entry: when price breaks above the resistance created by the handle. Stop loss. Below the bottom of the handle. Take profit. Measure the depth of the cup and project it upward. Bonus: this pattern works best on longer time frames like daily or weekly. 6. Ascending triangle, bullish continuation. Price forms a flat resistance at the top, but higher lows each time. What it means: buyers are pushing harder. They're not letting the price fall as much. Entry: buy when price breaks above resistance. Stop loss. Below the most recent higher low. Take profit. Measure the height of the triangle and project it upward. 7. Descending triangle, bearish continuation. Opposite of ascending triangle, flat support line with lower highs. What it means: sellers are gaining control. Entry: sell when price breaks below the support. Stop loss: above the most recent lower high. Take profit. Same height projection rule. Bilateral patterns. These patterns can break either way, so you have to be prepared for both scenarios. 8. Symmetrical triangle. Price forms lower highs and higher lows, creating a coil. Strategy: set a buy order above resistance and a sell order below support. Stop loss: just outside the opposite side of the triangle. Tip: use volume. A breakout with volume is more likely to follow through. 9. Wedges, rising and falling. Rising wedge, bearish. Price is moving up but within a narrowing range. Falling wedge, bullish. Price is moving down but getting squeezed. Strategy: use a straddle strategy. Place pending orders above and below the wedge. Confirmation: breakout with volume equals go for it. Strategy integration. Patterns are powerful, but patterns with indicators, unstoppable. Combine with indicators. RSI, overbought, oversold signals help time entries. MACD, momentum confirmation. Volume, validates breakouts. Moving averages, help spot trend direction. Multiple time frame analysis. Look for the same pattern on higher and lower time frames. Example: head and shoulders on 1H and 4H equals strong confirmation. Stack setups. Double bottom plus bullish divergence on RS, I equals sniper entry. Execution and risk management. It's not about being right, it's about managing risk. Golden rules. Never enter a trade without a stop loss. Always go for a risk-reward ratio of at least 1 to 2. Use ATR to calculate stop loss based on volatility. Never risk more than 1 to 2% of your account per trade. Journaling. Keep a record of your trades. Review what works and what doesn't. Patience. Only take high probability trades. Don't chase the market. Practice session. Let's test what you've learned. Setup 1-to-1. Chart forms 3 peaks at $150. Neckline at $140. What's the pattern? That's right. Triple top. Entry at $140 break. SL at $151. Target equals $130. Setup 2. Rounded bottom, small pullback. Breaks above resistance. Yup, cup and handle. Setup 3. Lower highs and flat support at $95. Breaks down. Descending triangle. Entry short at $94. SL $97. Drop your answers in the comments. I'll be replying to all. Recap and what's next. We covered 10 major chart patterns, how to trade them, how to confirm with indicators, risk management and execution, live practice setups. Now it's your turn. Go practice on a demo account. Join our Telegram group for daily chart analysis and trade ideas. Link in the description. Next video, we'll explore the top indicators to combine with chart patterns. You do not want to miss that. Smash that like button, hit subscribe, and share this with your trading squad. Until next time, trade smart, stay patient, and always trust the process. Thanks for watching.